Good evening and welcome to my end of the week recap here for the S&P 500 and plan ahead for next week. Real quick, excuse me, I did take one trade there on Friday. Price action gapped above, gapped up to, ran through, and came back to retest the 8 EMA here on a 5 and 15-minute basis, which is what justified me to take this trade. I got into the 13 July 270 calls at 270 and trailed me out as the 8 EMA broke here at 251. Now, right now, the 8 EMA is below price. However, midday, this actually was up around this 270 to 60-ish area. So that's what prompted me to get out. Closed it kind of out of fear, which in hindsight, of course, was a much better decision than to hold. So got out of that. I'm still holding August 295s and June 2019 325 calls. Now over here to the monthly time frame, we have had a close of the month. Have this green line marked here as 271.30 area, pretty much within tolerance, for my opinion, of where that April high still is. So going to be a very important level going forward. It's also the 50-day SMA right here, as you can see. Something at the end of the day caused the markets to sell off pretty strongly, and we'll have to see if that was just stops being triggered, bears coming in to start to take over. If it was algos that saw those bears wanted to sell, so they just absorbed it. We'll have to see what happens, but the monthly candle here is not looking very pretty. Go down to the weekly time frame. The weekly put in potentially a red hammer candle. However, red hammers like to test lows. So if price action does start to roll over and trigger below this level, I have an alert at 268.5. That will tell me to really protect a lot of other long positions that I have. So a couple things that could happen this month, and just maybe time to be on the defensive a little bit and not so aggressive. Been trying to capture some trend trades, but not much has really been trending lately, so it's been a little bit choppy for me. Now down to the daily time frame, we also have a red inverted hammer candle, which has a trigger below 271. So right now, bears do have the proper setups to push this lower, and if this monthly level cracks, expect a test of at least the 200 SMA. Being this close to the 200, just like the last time it did, it may come down, test it, bounce a little bit, and then flush through. It may even come straight down to it and flush all the way down. So we've already had a close test to it. We'll see what happens when it actually gets down to there. Looking very likely we're going to come down there. So trade plan I have for the open on Monday is I am actually going to be looking at these 272.5 puts here, pretty much off of the open. If it opens flat, comes up, has resistance, I'm selling. If it breaks down below this 271 level, I'm probably going to go out of the money a little bit and go to the 270 strike puts for a target possible consolidation right here. If it bounces hard and puts in a base and starts to break above, I will close out the whole position. However, I'm just looking at it to chop around at this level. Overall target is going to be this 200 SMA, about 267 roughly on Monday. If that holds, I will look for calls right there in the 267 to 269 strike about 2 weeks out in the future. Below there, if price action runs down and makes me a very nice trade on these puts, I will look for 263 calls here right around 261, approximately 2 weeks out in the future as well. And a lot of other levels down here below that I'm still holding as support. So all is not lost for the bulls. However, it's time to be very strategic and tactical and only take levels that do confirm, at least for my trading style and my purposes. This would be my trade plan for Monday and going into next week. If you have any questions or comments, please feel free to leave them down below. Have a good weekend and good luck.